All right, y'all, welcome back. Obviously, the first video went well, so you're back for the second one. In this series, reminder that we're doing this because we want you to have eyes wide open if you're going to decide to get into the real estate profession. This video, we're going to be talking about 1099. Majority of people that get into real estate come from a W-2 background. And obviously, I'm talking about the actual form number in the tax code of how you get paid, right? Your previous employer paid you a paycheck, they took out taxes, they took out Medicaid and all other stuff. I don't even know what they actually took out. But in real estate, 90% of the time, you're gonna be a 1099, AKA independent contractor. And the way that works is when you close something, you're gonna get that full paycheck. You're gonna get that full amount, and your broker's gonna be like, hey, you got your part, good luck. At the end of the year, they will give you a 1099 form letting you know how much that you actually got paid. And they give that other side to the government to let them know how much they paid you so they don't have to pay taxes on the money. But what I really wanna dive into is when it comes to 1099 status, you're responsible. And so I find it humorous in a sadistic kind of way. Every year around tax season, when newer agents walk in, they go, holy I have so much taxes I owe, and they're not used to paying taxes. So there's a couple things I want to share with you. One, if you're working here, part of our strategy is to get you with a CPA immediately. Not that you're gonna have this huge financial plan that you need to be working on, but it's gonna help you identify ways to reduce your income on paper so you don't pay as much taxes. The big thing in real estate are deductions. And typically, being an independent contractor, you're your own business, and things that you do in your business and supplies that you buy can go against what you made on paper to reduce your tax bracket. So very rudimentary example, you made $50,000, but you had $20,000 in write-offs between your mileage, between buying folders and pens and your realtor dues. So on paper, it looks like you've only made $30,000. So instead of being at a, I'm making this number up, 20% tax bracket, maybe you're only paying 15% on that $30,000 that you made. So all that to be said, you've really got to get that foundation first because you don't want to be at the end of your first year going to do your taxes and all of a sudden thinking that you're going to get a refund like you have for the last 20 years and then you owe $30,000. So one of the things I would recommend when you get in this business, not only is get a CPA, but when you get your bank account set up, one is for taxes. I would recommend every check you get, I don't care if you have 2 closings, every check you get, 30% put in that account. When your tax bill comes due, you should have more than plenty of money to pay that tax bill. Anything left over, slush fund, it goes into your pocket, right? But do not get caught owing more taxes. I have seen this wreck people's springs day in and day out because they do really well in real estate. They start selling, they think they saved enough, and they never do. You need to save at least 30%, and you should have plenty of money left over at the end of the year. Hopefully you found this video helpful. I know it's kind of deep on taxes. Nobody likes it, but nobody also likes paying big bills when they don't have the money for it. So if you have any comments or you have any questions or topics you want me to tackle, hit them down in the chat below. Also, do me a favor, hit that like and subscribe, please. I'm trying to get these videos out in front of as many people as I possibly can.